everybody, this is Tim Kelly from Breakthrough Insurance Group, and welcome to The Big Idea. Today I wanted to get back to basics a little bit with you and discuss the power of fixed indexed annuities. So I wanted to do that by showing you this chart. So on the left-hand side, on the y-axis, you can see that that is the amount of money in the account, and that starts with $100,000 back in 2001. And along the x-axis, you have the years. So 2001 to 2022, that's the last 21 years of performance. And you have three lines on the chart. The first is the S&P 500. It's the red line that shows you how that has done over the last 21 years. You have a 4% fixed strategy, so that's just a flat 4% compounded every year. You could think of that as maybe a multi-year guaranteed annuity paying 4%. And then you have an indexed annuity in the dark blue here with an 11% cap rate, which is about where the top FIAs are paying in terms of caps today. We have several up in that 10 to 11% range. So let's just take a look at how this has gone over the last 21 years in these three different types of investments. So you can see in the down years, as an example, 2001, the S&P 500 drops down to 76 grand. Of course, during a down year, the indexed annuity is going to remain flat. And of course, for your 4% rate of return, you get that small amount of return in that year. Of course, those people would have been very happy with the markets down around 24% in 2002. And as you see, after a down year, the S&P 500 continues up until 2007, and then we have another big down year in 2008, and that account drops back to 78,000 again. So, and then we see a large, long time here where the markets are up all the way until 2017, and then in 2018 we see a drop again, and then another rising market until, of course, 2022 when we see a big drop again. So over time, what you'll notice is with the indexed annuity, anytime you see a down year, again, you're just going to see a flat rate of return for the indexed annuity. So emotionally and financially for your clients, that indexed annuity is going to be very good for your clients. So you'll see, because there's no big losses in the indexed annuity, where the worst you can do is a 0% rate of growth, that the flat years really help to keep your account value much higher than what the market is actually returning. Now you're capped at 11% in this example, but as you can see, over this 21-year period, there's only one point in time where the S&P 500 has actually outpaced the indexed annuity, and that is in 2021. But you can see quickly thereafter in 2022, it drops back down. So over time, this account in the indexed annuity ends up with 401,000, the S&P at 334,000, and the 4%, let's say a MYGA, at 227. So the FIA wins 20 out of the 21 years during this time frame. As you can see here, the other thing that is not mentioned is that there's no reference to taxes. So as you know, in a indexed annuity or any type of annuity really, there is tax deferral. So you don't have to pay taxes until you take the money out. If this money is in a non-qualified account invested in the S&P 500, then of course you would have to pay taxes on those gains every year. So as you can see here, the one last thing I'd like to point out for you is that after a down year in the market, there is normally a long time horizon of sustained growth. You can see it here after 2002, doesn't go down again until 2008. Then you have a very long time frame here where the markets continue up from 2008 all the way until 2018, until it goes back down again, so a 10-year period. And then again from 2018 up to 2021, another good time frame of up years. So my point is that with the market down in 2022, now is a great time to get into an indexed annuity so that you can take advantage of historically what happens after a down year, which is a long sustained growth period. So now is a great time to get into fixed indexed annuities. We have many products available for you with those cap rates now at very high rates of return in the 10 to 11% range. We have some great participation rates as well. So if you're interested in talking more about any of these products, please feel free to reach out to Tony and Vic here at Big. And thank you for watching The Big Idea.